Now, the rand sank this week to within sight of 3-year lows against the dollar as a wave of strikes spread beyond the mining sector, threatening the biggest industrial crisis since the end of apartheid. We unpack the impact these strikes are having on the local currency with Brigid Taylor. She is head of institutional floor sales at Nedbank. Brigid, I'd prepared a question that I was going to ask you. Then I was told by my producer, I have to ask you, how is your laryngitis?
My laryngitis, I sound like Vin Diesel, but it's fine. It was bad on Monday, Godfrey, but it's better today.
Absolutely. I want to do another little exercise before we begin. I'd like to take a rand view from all of you. What's your focus for the next 6 months?
I'd say we're now looking for 920.
920. Warwick?
870.
870. Bruce?
Yeah, I just, to take a spin and predict exactly where the currency is going to be, I think it's going to be a lot weaker. How much is anybody's guess? I just
Consensus is that it's going to be weaker from here on.
Yeah.
So, Brigid, we need some answers from you. So we've got strikes, we've got a downgrade, we've got an upcoming policy conference by the ruling party where potentially some minerals are going to be designated national and therefore perhaps talk of nationalization, creep again, beginning to come back to the table. Just how bad can it get for the rand?
Well, I think there's a couple of factors, Godfrey. We've had over the last little while, we've seen that the rand's behaved relatively poorly in accordance to what other emerging markets have done. So the rand has continued to close at weaker levels, despite the fact that we saw a rally on risk. We saw risk buying, we saw the euro rallying, we saw emerging markets rallying, and we didn't see the same in the rand. We then had a lot of skeptics around the WGBI inclusion saying the rand's going to rally, we're going to see huge bond buying, we're going to see this massive inflow into South Africa. The non-event that we saw on Friday and Monday produced nothing of that. So what we've consequently seen is the feed-through of the negativity around the mining strikes, which started obviously with Marikana and then has progressed into the strikes within the trucking industry and even progressed into the likes of the iron ore smelters, etc. So the concern is that nothing's abating. If anything, it's getting worse. And from an investment point of view, specifically a foreign investment point of view, one, you've had a downgrade by Moody's. Yes, they've tried to play catch up according to what Fitch and S&P had rated us as.
Sure.
But the risk that it poses is we are now lining up for medium-term budget on the 24th of October. And the big risk that we run are some of the things that were pointed out by Moody's in terms of their decision to downgrade us were things like the concerns around productivity, the concerns around managing our budget deficit, the concerns around the unemployment in the country, the unrest and the volatility of the currency. These are things that are not going away and are certainly not being remedied. And my big concern is, come medium-term budgets, are they not gearing us up for a potential further downgrade? Yes, the rating agencies are relatively behind the curve, and the currency itself speaks in terms of where the market deems the value of the currency lies. I'm concerned, though, that we're going to start to see a massive erosion because technical levels on the rand show 860 as the top. If we break through that, the next technical level is 920. Now, I think I'm being quite conservative by calling 920. We potentially could see even higher than that, and that's the big concern.
So tell us, when was the last time you revised your rand focus for the next year or so?
Well, look, I've been a rand bear over the last year. I was previously a massive rand bull, and I used to argue a lot with my colleagues at work about the relative value of the rand. But consequently, this year we've seen continued action that hasn't supported in an environment where we should have seen rand strength come through, and that's been really unfortunate. And the concern for me is, as Bruce was alluding to earlier, the things like the productivity, we should be maximizing on a weaker exchange rate in terms of our exports, and we're not able to do that. Why? Because of the uncertainty within our productivity in South Africa from various industries, as it seems at present. We've got the talks coming up at the end of the year, a lot of political tension. There's concerns also around those bilateral agreements with Europe. Yes, Europe's in a state of flux, and yes, Europe is battling to grow, but the whole globe is battling to grow. Where do you go where there's huge growth? You can't even go to China and expect huge growth.
Would you go so far as to call the rand at the moment, perhaps for the next year or so, a one-way bet?
I would, except I'd have to say be very, very cautious, because in a bear market, bears bite hard, and they have got sharp pulls back, and the minute that you see a dip back, I mean, I was saying it a show or two ago, buy the dips. If you see those dips to 820 or beyond, buy the dips, because unfortunately the environment at the moment, and the big concern is that we've seen huge inflows from offshore. One, because we've got this great interest rate differential. We're now coming up to another interest rate decision in November, and the concern for me is the global environment says interest rates are low for a long period of time. We're getting sucked into that because there's this global growth slowdown. The MPC is under pressure to keep interest rates low, and if not even lower them further.
Yeah.
That actually diminishes our value in terms of the fact that underlying factors are not looking great. Now you diminish the value in terms of the the carry trade. Where's the value? And we desperately need those inflows. Why? Because we've got a widening budget deficit, and it's a massive concern.
I saw a note coming in from Citigroup today where they were looking at the impact of the inclusion of South Africa from the 28th of, I think, of September, and they said at 5 p.m. exactly the inflow started coming in. They've calculated that there was foreign buying to the tune of $2.75 billion over the period. But interestingly, what they are saying is, based on what they saw in Mexico, and Mexico was included in the World Government Bond Index, the inflows that will come into South Africa, they say, are likely to continue for another year. Surely that's a positive. That may well counteract some of the negativity that we're talking about here.
If the foreign investors deem this as a good investment, that's your number one key point here, because unfortunately, as we've seen the sell-off in the rand, that's a direct indicator that we're seeing a slowdown in that foreign investment. The other thing that you must keep in mind is a good portion of that, when we look at the numbers, when we looked at the numbers on Monday, we were looking at where the flows went. Did we see flows? You saw direct flows of about $600 million, but you saw another $500 million that was in the repo. So that was sitting in offshore banks already,
right,
that then got sold off into the tracker markets. So a lot of that money has already been taken offshore, has already been invested by the banks that were preempting this move.
Yeah.
So you've got to ask yourself, are we going to continue to see the robust flows that we saw previously? I would say probably not to the degree that we were seeing previously.
There's no silver lining here.
Yeah, I think what we really want is a conducive environment for that foreign money to come in and to create manufacturing jobs, to create long-term strategic investments in South Africa. They're going to make a meaningful difference. Because the danger that you've got is, understand, the world doesn't care when a return is going to look slightly brighter somewhere else,
right,
and those portfolio flows will just leave our country. And the effect of that is far more devastating from the fact that it's not a long-term strategic investment. It's just purely, I need a return for my money now. I'm going to park it there and make as much as I can. But when things change, I'm gone because I don't like the conducive or the type of investment.
Well, the risk is too high.
That's it.
And the risk being too high. Now, your other thing as well, Godfrey, is that you've got to ask yourself, in South Africa and what we're seeing within the mining sector and the trucking sector and that underlying core of what's going on, I think it's an uneasiness of people in the country saying things have not changed for me, I'm feeling uneasy, my job's under threat, I'm not earning what I should be earning. Where's government in this? Where's government stepping up and saying we're going to put money on the table and also contribute? You can't leave all of this to business, especially when business is under threat of strategic nationalisation.
Where's government, Warwick?
One wonders.
Are they at Mangaung already?
One wonders. Really, yeah. I mean,
I'm looking for some positivity here.
Sorry, God.
It's suddenly grown quiet in here.
Look, I mean, the one thing that has surprised is that the rand really should have been showing more negativity in the face of this news, the spring of discontent, and it probably has partially been offset.
I like this headline, spring of discontent.
By the WGBI inclusion. So there's a few big unknowns out there. There's a lot of surprises as markets can still throw at you.
Final thoughts, Brigid?
Look, I think on the upside of that, we still do offer a great interest rate differential. If we can get the underlying political issues at bay, we can potentially see those tracker funds continue to invest in South Africa. Absolutely. Why? Because we're still a good investment. We still have a great interest rate differential when interest rates are on almost zero globally. So it's about getting the underlying factors right in order to facilitate that.
Governor Jill Marcus, don't touch that rate. That's the message I'm getting from Brigid Taylor from Nedbank Capital. Thanks to my guest host, Bruce Main from Ivy Asset Management and Warwick Lucas from Imara SP Reed. After the break, stay tuned for Investment 360.